11/19/2012, 1:08 p.m. Markets are closed. This is a Dow Jones up 207 handles. It is a relief rally, like we have said. When you get into these deep daily sell signals, they are bear trends. They are not bull trends. We had close to 1,000-point correction in the Dow. I will just tell everybody that relief rallies are relief rallies. There has been no resolution by the government. They're all on vacation. That's where they're at. Bear rallies, bear moves get deeply oversold. They have to have counter rallies. People that have been around many years know exactly what I'm talking about. The other thing about it is that downside bear trends are not broken one day. You can make great money by understanding how to trade an oversold bounce as a relief rally. And we're hitting the 10-day simple moving average on the Dow. Nasdaq 100, same thing. We're going to come back up here. Deeply oversold here with the bounce. It was in correction territory at 10%. Nasdaq Composite, same thing. Back above the 10-day simple moving average. The lesson learned here, folks, that in a shorter time frame, we went from great bulls in all the indexes to extremely deeply oversold bear territory, no matter what. And when you get this oversold, you're going to get a rally off of the bottom. And it finally came in a Thanksgiving holiday. That's when it came. There's no one around. Thursday we're closed for Thanksgiving. Enjoy that. Friday's going to be a half a day. So it's a light holiday week. No one is around. It's a perfect time for an oversold market to make a bounce. Once again, we will teach you how to trade the indexes and equities in deeply oversold markets. They're not bull trends, they're bear trends. A lot of people haven't seen these bear trends. You have to go back a calendar year. S&P 500, 200-day simple moving average. As we said, it hit our lower targets down here that we had forecasted when we were up here at 1460, what that lower end would be. In the shorter macro term, in a holiday week, you got extremely oversold, which was 7.16, and now it's at 23.18% DS. And this is the first day of a relief rally. Let me caution everything that I've said here on the indexes. Dow up 207, Nasdaq 100, up 61. Nasdaq Composite up 62. The S&P 500, 27 handles to the upside. Once they go up and hit their next resistance levels, we will be taking a look at put option on the indexes. There'll be lots of price volatility. There will be bear volatility. There will be some bull volatility, but every one of these markets were deeply oversold. They had to go higher. Everything gets a relief rally. Just like when they got overbought up here, they had to come down to here. Well, now that they've come down here, well, they have to go back up. I would go to stockmarketfunding.com. I would get set up to learn how to trade bear markets and oversold markets. Oversold markets are great for short-term gains. Once they work the oversold part off up to their next resistance levels, and we'll be bringing it right to the plate, we'll look for that next reversal down. I will just conclude that the S&P is above the 200-day simple moving average. The next resistance level is going to be right below 1400. We're not that far away. It closed at 1386. Relief rallies go up to major resistance levels, which used to be support levels. So the long-term support levels that broke down, no matter what, are going to be that upside resistance levels within deeply oversold territories, as we have countlessly updated and have went through this whole thing. And once again, it was one correction. There is no Fiscal-Cliff resolution either. It's all speculation that they may or may not do something. We'll keep everybody up to date. Just remember, oversold markets rally up to resistances, then we see what the resistance levels do at that point. And if they roll over right up here, 1410, remember, once it broke my 1400 level, we came all the way down here and we put those low levels in there now, right around that 1343 handle. We never made it quite down to 1320, but the daily low on 1116 was 1343 now. So basically, we're going right back up where this part of the breakdown in the S&P hit those lows. So the resistance levels will remain up here. You don't want to be a long-term buy and holder ahead of the government. So far, we don't know exactly what they're going to do, but this is the best, strongest 2 months of the year, as we've always said. We were deeply oversold going into November and December, which are the 2 calendar months of the year where people enjoy their holidays, they enjoy their gains in their stocks, and fund managers buy, and lots of things happen in this fashion, always. That's why you get the year-end rally. But the government has made it almost impossible. They've got 52% of the people sitting on the sideline. A lot of this was short covering. A lot of it was due to high-frequency algorithmic trading technologies that robots walk the prices higher and higher and higher. Do not buy into the fact that this rally right here is a bull rally when it's not. We're deeply oversold into bear territory. When you get this deeply oversold, it's bear territory. And bears get squeezed. You can't, and everything has to have a forgiveness to it. Well, this is your forgiveness. Now sell into the next resistance level.